As of today, Monday, June 15th, 2026, at 12:09 p.m. Eastern Standard Time, the market is open. And Ondas Inc., trading under the ticker symbol ONDS on the Nasdaq, is showing a live intraday stock price of $9.33 per share, marking a decline of roughly 5% from its previous levels. Trading volumes are exceptionally heavy, with over 55 million shares changing hands as investors react to a cocktail of massive capital shifts, technical indicators, and intense commentary sweeping through the trading community. While the headline numbers show a sharp 5% drop, the underlying reality is far more complex than a simple bad day on the trading floor. Right now, Ondas Inc. is walking an incredibly thin wire between mind-boggling operational growth and severe equity dilution that has caught many retail investors completely off guard. Most people looking at the stock are focused purely on the massive sales growth, but the real narrative driving institutional smart money behind the scenes involves a massive corporate restructuring and an aggressive acquisition spree funded almost entirely through the printing of new shares. This has fundamentally changed the math behind what each individual share actually owns, turning a straightforward tech play into a high-stakes corporate puzzle. The general consensus among casual observers is that Ondas Inc. is just another volatile small-cap tech player catching a temporary wave of momentum in the autonomous defense sector. Investors see a company whose stock price has whipped up from the $9 range, spiked past $13, and then slammed back down toward the $9 mark, attributing it to normal retail speculation or meme-like price action. But if you peer underneath that volatile surface, you find a company that is radically restructuring its financial DNA to support a pro forma backlog that has expanded to a staggering $457 million. The expectation was that the company would slowly build out its proprietary wireless and autonomous hardware networks. The reality is that management has chosen a high-velocity, hyper-aggressive consolidation strategy, acquiring entities like Centriax and Rotron Aerospace to build an integrated defense ecosystem, sacrificing near-term per-share value to capture immediate market share in autonomous defense and critical communications. This clash between expectation and reality has caused massive daily swings, with trading volume regularly exploding past 70 million shares on peak days. Institutional activity has become highly erratic as fund managers try to reconcile a first-quarter revenue figure that jumped by over 1,000% year-over-year to $50.1 million, against the reality of an aggressive stock issuance program. This relentless issuance expanded the company's share count by an astonishing 324% in a very short window. For anyone utilizing modern online investing applications, from traditional setups like a Fidelity brokerage account or Fidelity Wealth Management to platforms focused on active self-investing like the Robinhood app or a SoFi active investing account, this dynamic creates a massive valuation headache. The traditional metrics on these investing sites are completely warped, showing a trailing price-to-sales multiple hovering near 50, a metric that would look terrifying in a vacuum, but is actively being masked by a pro forma cash reserve that swelled near $1.5 billion following aggressive capital raises. The pressure on the stock price has also been amplified by heavy macroeconomic headwinds and shifting sector momentum. Higher interest rates have broadly punished companies with high cash burn rates, forcing investors to scrutinize execution timelines rather than just multi-million-dollar backlogs. Furthermore, high-profile media mentions, including recent television commentary labeling ONDS a speculative retail vehicle, have triggered a wave of cautious automated selling across automated intelligent portfolio systems and retail brokerage platforms alike. When automated systems like a Schwab Intelligent Portfolios account or a SoFi robo-advisor rebalance based on sudden spikes in volatility and insider selling disclosures, it creates an immediate downward draft. This explains why the stock has lagged behind broader indices like the Invesco QQQ Trust and specialized aerospace tracking funds over the last several sessions, as algorithm-driven retail flow and passive fund adjustments clash with long-term institutional accumulation. To truly understand how Ondas Inc. reached this point, you have to look at what the underlying business actually does. The company operates through two core segments, Ondas Networks and Ondas Autonomous Systems. At its core, the business is built around providing private, high-secure wireless major railroads, electric utilities, public safety agencies, and oil companies to operate wide-area broadband networks that are entirely isolated from public internet vulnerabilities. On the autonomous side, they develop fully integrated drone-in-a-box solutions, counter-unmanned aerial systems, and advanced aerial interception technologies designed to neutralize hostile airborne targets without relying on traditional missile defenses. Historically, this was a slow-burning, asset-heavy business model that required years of regulatory testing and pilot programs with major corporate partners, resulting in minimal revenue and consistent quarterly losses. Older financial reports from a year or two ago paint a picture of a microcap struggling to cross the $10 million quarterly revenue threshold. But the business model underwent a structural shift when management pivoted aggressively toward the national security and autonomous defense sectors, realizing that the same secure wireless protocols they built for industrial freight trains could coordinate fleets of autonomous military drones. By layering artificial intelligence software onto their physical hardware platforms, they transformed from a simple communications equipment provider into a full-scale operational software layer for multi-domain autonomous warfare. Comment below how many shares of Ondas Inc. you currently hold in your portfolio right now, or if you are keeping it on a watch list. Looking forward, the future outlook for Ondas Inc. depends entirely on whether reality can finally catch up to the massive expectations built into its $457 million backlog. There are a few specific catalysts that will dictate where this stock trades by the end of the year. The most immediate catalyst is the upcoming global rollout of their new software architecture at the Eurosator Defense Exhibition in Paris. This new platform is designed to act as a unified command and control system that ties together sensors, robotic ground units, and automated aerial interceptors into a single interface. If the company can secure definitive, binding international contracts during this event, it will provide the market with concrete proof that their massive backlog is translating into predictable, high-margin software revenue rather than just theoretical future bookings. However, the opportunities are balanced by severe structural risks. The primary risk remains execution timeline friction. If it takes quarters or years to convert these massive defense orders into recognized revenue, the current cash burn will continue to weigh heavily on the stock price, potentially forcing management to utilize their recent prospectus filings to sell even more shares into the open market. This threat of ongoing share overhang could cap any near-term upside, keeping the stock trapped in a volatile trading range regardless of how many positive press releases are issued. For investors managing their own capital through individual brokerage setups, whether that means adjusting positions on the Interactive Brokers platform to minimize margin fees or holding long-term blocks through standard Fidelity mutual funds, the key variable to watch is the gross margin trend. If gross margins continue their recent upward trajectory toward the 50% mark, it proves that the software component of their business is scaling effectively, which would eventually offset the dilution distress. Ultimately, the central insight here is that Ondas Inc. is no longer the simple industrial wireless company it was a few years ago. It has successfully positioned itself at the cross-section of autonomous defense and secure communications, driving massive top-line expansion that most small-cap companies can only dream of achieving. Yet the price of that expansion has been a massive dilute-to-grow strategy that has fundamentally altered the equity structure and left the stock highly vulnerable to sentiment shifts and volatile retail trading cycles. The contrast between the expectation of a smooth, parabolic growth story and the messy reality of heavy share dilution, insider sales, and execution delays is exactly why the stock is experiencing such heavy intraday pressure today. Investors who understand this friction can look past the daily noise of 5% swings, recognizing that the long-term value of ONDS will not be decided by television commentators or short-term trading volumes, but by the company's ability to efficiently convert its massive backlog into real per-share profitability. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.